complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone, learn off of them, one-on-one. Now that can be really expensive, cost thousands of dollars, but I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro. Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Quite a weekend. Venezuela. Well, I always tell my gang members, the market always does what it wants to do, but never when it's supposed to do it. The other thing I always tell them, always follow the money, not the noise. Boy, did that come out true today. So let's talk about what's going on. Why is it that tech stocks are rallying? And that makes a little sense. Because remember, tech stocks are the first to get hit when there's geopolitical issues, okay? And they're the ones, again, that are rallying today. And here's why. Because, first of all, let's take a look at why they should be going down. One, because they're expensive. The valuations are stretched. The prices are stretched. They're always exposed to fragile supply chains, especially in geopolitical issues, especially, in Japan and, everywhere. I mean, they just have problems with supply issues. And if there's geopolitical problems, it hurts. So that's one reason of many. Now, so why is it rallying today then? What's happened? What's so different today? Well, what's so different today is that you have the tourist investors. They're turning back, and they're going back to December 17th. Okay, they're reaching all the way back, the tourists and the FOMOs. And they're saying, oh, wait a minute. Look at December 17th, we had an earnings blow up. So I'm going to continue buying these stocks. I don't care about what's going on with the geopolitical issue. In fact, Micron Technology, all the companies that manufacture chips, they're gangbusters. And I'm going to keep buying them on every dip. And they outperform, or they're outperforming, if you want to use that word, they're outperforming everything. And they go back and look at Micron Technology, and they go, look, we had blowout sales, their bandwidth memory, all sold out for 2026. They're working on orders 2027. Blowout earnings they talked about today, blowout future earnings going in the future. They talked about that today. Is another reason why tech stocks aren't getting hit when they are always the first to get hit with geopolitical issues. And also they got a hand today with dropping yield. So think about it this way here. So what they're saying is we don't care about every time there's a geopolitical issue, the tech stocks get hurt. It's different this time. How many times have you heard that? It's different this time. And the difference is that AI and chips are so dynamite, nothing's going to stop them. They're just going to keep going up forever. And we heard that, of course, back in 2000, 2001. But they're forgetting the issues, too. We have some terrible issues with AI. Funding, that's a real problem. Investors upset. They're not getting much of a return on all their funding. The kind of cash they're putting out is incredible. They're not seeing the returns. So Now, I'm not going to go through all of that, but you know all the stories about AI and why, everyone's worried. But today, for some reason, okay, it was, the tourists picked today to go back and to start buying these stocks. And then Wall Street chimed in with, oh, yeah, you got to buy these chip stocks. Forget geopolitical issues. So that's what basically happened today. And I told my gang this morning, let me see if I can find where it was here. I told my gang this morning about about the banks. That was another issue today, the banks. Now, the banks also get hit when there's high oil prices. And the reason for that is because when there's high oil prices, that means that there's higher prices, there's inflation. That means consumers have a problem. They stop spending. And when they stop spending, they don't go and make mortgage applications at the banks. They get behind on their credit card payments, their car payment. So that's another reason why the banks get hit when oil prices are going up, but not today. Now, we've been in the banks for quite a while now, just like with our gold. And last night, I did a message to all my members saying today, the market opens, I told them these are the things that should be going up and these are the things that should be going down. But again, you have to wait and see because you never know what's going on in the market. You never follow the noise, you follow the money. And when the market opened up today, boom, what happened? Tech stocks soar, bank stocks soared, which I was grateful, my gang was grateful because we're in the bank stocks. They didn't go down. Now what they're saying about the bank stocks, Wall Street, like what they said about the tech, geopolitical, don't worry about it, doesn't matter because AI is so strong, especially the semiconductors. None of that bothers us. And the banks turn around and said the same thing with oil. Oh, oil, don't worry about oil. That's not bothering the banks because, again, we have a good economy, job growth. We have strong labor market, which we don't have any of that. So they're out there today trying to take parking space in our head that the banks are going up because the oil prices don't matter. Because again, the oil prices going up would matter, Wall Street said today, if it was based on we have a shortage and there's great demand and we have more demand than we have oil, but that's not the case. So that's why it doesn't matter. This is geopolitical. Who cares? Doesn't matter. So Wall Street, again, tied that one over. So just think about that. So Wall Street comes out and gets the great excuse for tech stocks, and they went right to the ones they should. Micron Technology, again, going back and grabbing that December 17th and saying, look at this. And then oil shoots up, and Wall Street says, oh, don't worry about that because it's not shortage. There's no demand for oil. So this is geopolitical, all geopolitical. And so that's why you're seeing the banks soar and you're seeing oil going up and it's not hurting the banks. But remember, we've seen this before. When you have this kind of reaction, this kind of emotion, okay, and exactly what Wall Street's doing and pushes these two groups up, I've seen it. You just have to, like I said to my gang members, we got to wait a couple days, let this settle down. It'll all settle down and come back. How many times have we had 800-point, 900-point rallies, 700-point rallies with 2-3 days? It all came back, especially the tech sector. The tech sector has so many problems. Yes, Micron, the chip makers, Intel, all of them, yes, they're doing great. But there's more to the tech sector than just the chips. Now, the chips, that's where all the big income is coming in. But let's see if we have this kind of a punch in the next couple of days. Now, the other thing that's very interesting is the dollar. Now, the dollar, like myself, we know the dollar's been getting crushed. The dollar in the last half of 2025 remember, dropped 10.8%. Our first half, 10.8%. And so, and now the dollar is rallying because the dollar is always considered a safe haven. They always have like gold, dollar, gold, always when things happen, geopolitical problems, everybody runs to gold, silver, copper, and they run to the dollar, safe havens. But remember, we have a very weak dollar, and the reasons for the weak dollar have not gone away. They haven't gone away. They're still with us today. So what, do we just forget those two? No, I guess so. That's what they're telling us to do. Forget that we have incredible rising debt. Forget we got incredible deficits. Forget that we have a slowing economy. Oh, and forget that we have a weak labor market, and that is the truth. You can, everything they tell you how the labor market is strong is a bunch of BS. We have a weak labor market, that's the truth. Rate cuts, how many times you heard throughout 2025, rate cuts, and then we didn't get any. But then at the last quarter, bam, 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 October, November, December, 25 basis points, 25 basis points. So, and remember, we still have the tariff chaos. Another reason why the dollar is so weak. And all our trade policies are so uncertain. And we have our stocks, okay, are weakening because of, especially the tech stocks and the AI stocks, because the valuations are stretched. So, in prices. So all this that's going on today was, again, our gold stocks were supposed to go up today, and they did. Gold went up beautiful today. So that worked. So the only thing that really didn't work today was, again, the tech stocks and the banks. But let's see what happens in the next few days. That's why you never chase these. I always tell my gamer, I said to him this morning, I said, when the market opens, whatever happens, whatever sectors gap, and you're in them, sell into those sectors. Don't get out, but sell in, take more profits. What a great opportunity in semis, because we're in the semis. What a great opportunity we had this morning to sell into them, take profits. But remember, it's not all the tech stocks that are doing well. Not all of them. Look at AVGO. Broadcom, not doing well. Matter of fact, here, let's go to this chart and take a look at AVGO. That's one of the tech stocks that are not doing well at all. Now look at I think it was AVGO. Look at this. Oh, it's pulling back. So if you go through the stocks, let's look at the ETF, SMH. Now the ETF took off today. See it? Right there, it took off. It's above 3 moving averages. That's strong. It's got a good, strong trend. Not strong volume, but it's got a good, strong trend. Now, and we always watch our volume going back 4 or 5 days. Look at MOVE. There's the one that took off. But look what happened today. Look at my third chart here, Pro 3. This was the opening high today. And look how it couldn't keep that opening high. So we had a lot of gap ups in the stocks where they gapped. For example, right here, right? You had a big gap. You had this gap. All right, then you had a gap. But guess what? The high didn't hold. The high didn't hold. That's not good. MOVE. Even MOVE. The high did not hold. And look at Taiwan Semi. We had again a gap up this morning, and it didn't hold. So when you have a stock that rallies in the morning like this, they start gapping up and running. Don't chase them. That's what all the FOMOs did this morning. Now they're hurting because when you look in the morning and they first open, look at the high, opening low, and it's got to stay at the opening high. And that gives you a good, strong candlestick for the day. But most of them didn't do that, so that's not a good sign. AVGO, look at this, terrible. Look at the downtrend, terrible volume. If we look at ADI, it's consolidating, but the trend is starting to break to the downside. And today we had another big gap up, right? I mean, not a gap up, but we had a big move in the morning, He started giving it back, couldn't hold the high. So again, these are the things you gotta look at. You just can't listen to the noise and go, oh, let's follow Wall Street, let's do what they're saying. Oh, they must know. No, they don't know. They don't know. They have their own agenda. I mean, they know, but they have an agenda to make money. And what an opportunity this was this morning to protect those tech stocks. Thank God they had that December 17th earnings on Move that they could reach back and push it out in front of it. Look at this. No, look at this. Don't look at this hand over here. Look at this one. Look at this one. That's what they did. So I said to my members again, like any big rally you have in the morning on these morning openings, relax, sit back. If you're already in a stock and it goes up big, take more profits, reset your stop. But never chase these, because we've seen too often. How many times have we seen this? Then she turned around and dropped. So, okay, the other thing I wanted to talk about today is let's go back to, I think we covered everything, right? We had gold. We talked about that. We talked about gold just going to continue to go up because gold and silver and copper, it's just a safe haven. And the banks, the central banks keep buying this stuff. You know, the December 29th when we had that pullback, they didn't sell any of their gold, did they, or silver? So we'll talk more about the future of gold and much more when we come back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, you're going to learn how to play tennis, ski. You need to be with someone, learn off of them, one-on-one. Now that can be really expensive, cost thousands of dollars, but I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro. Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
Welcome to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
Welcome back to Phil's Gang. And you can join our gang free for 10 days. Check it out, philsgang.com. You know, the interesting thing is that 93% of people lose money in the stock market because they don't know how to sell stocks short. So that means you have to buy stocks and only buy stocks, and you have to trade them to perfection. That's why 93% lose money in the market. Isn't that incredible? And I think about that all the time, but people just keep doing it. They think, okay, I got another hot stock. I think I got this new stock tip. Everybody's looking for the hot stock, the stock tip. It has nothing to do with the market. Anytime you hear Kramer or these other guys, all these buffoons on TV, they've already purchased the stock they are promoting months ago, weeks ago. When you hear them talk about a stock, you're not getting a deal. Remember, they buy the stocks first. It's not like years ago. Before, they had discount brokers. Your broker was really, it's like your doctor, your accountant, very loyal. And they'd go find you deals. They would go find you good companies that just got screwed up with management. And the stock dropped from 100 down to 30. And they searched for those companies with good, solid fundamentals. And they would then get you into those companies. And over years, they changed the management, stock would grow, earnings, boom, boom, boom. And all of a sudden, you got a great portfolio that's stable and strong. We don't have that anymore. It doesn't happen anymore. With today's computers, technology, I mean, all they're doing there is to churn you, just keep churning you over and over. Here's the hot stock for the day. But remember, this tech sector, you got to be very, very careful. Okay, today I couldn't believe what I was seeing. And I don't want to keep going over, but I was stunned. I've been in this business for 50 years, and I've never been stunned in my life, okay? But anytime you have a geopolitical problem, those tech stocks always tank. But they didn't today. They're saying, no. Go back and look what happened in the past. That's another thing they talk about all the time. When they talk about how when yields are going up, that means, boy, we got a great economy. No, it's telling when yields are going up, we may have a great economy if we have growth. So there's a lot of things that go on in the economy and the stock market, these little things that people don't have any idea about, and that's why 93% of people lose money. But that's what we help you with. But let's get back to what I was talking about. Now, the big question we always ask, every day I'm getting this, every day, not just from my gang members, I go down to the car wash every day. Phil, what's going to happen? What's going to happen in the new year with stocks? And I always tell them, I said, the same thing that happened in 2025 is going to happen in 2026. The same thing that's been happening for a decade or more than a decade is going to continue. The same thing. As long as the Fed continues to feed the beast. That's it. Now, and there's a big misunderstanding about that too. So they always refer to, you see, the reason why the market's doing well is because we have this incredible increase in money, okay, this liquidity, you see how much the Fed has increased the liquidity? Look how much the Fed's increased the liquidity. Buy. So people in their mind are thinking the Fed went out and sold assets or went to the Treasury, got a whole bunch of money and threw it into the economy in the stock market. No, that's when they say that to you, so you go out and buy stocks. Just like today, they went back to the earnings in December, okay, which again, the funny thing about earnings, you have to buy the stocks before the earnings. And then when the earnings come out and they do great, then that's where you sell most of it. Today, here it is, that's December 17th. Here we are in January now, and people are still going back and hanging on to that date, that blowout. And it was a hell of a blowout with Micron Technology. But that's not how the market works. You always try to get into stocks when nobody wants them. When nobody wants you, get into what they call a sweet spot. And there's going to be a lot of people that are going to get hurt. I said to my gang, look, all these stocks, and we're in some of these stocks. We bought them some time ago. said, let's wait and see, and don't anybody add to your tech stocks today. Don't add to your position. Don't go in and buy. In a couple of days, this is going to pull back, and when it pulls back, boom, makes a new high, we start adding. Or even today, if the stock was at $20 and it pulled back to 19 and went above 20 again, you can add a little, okay? But you can't trust this market when you have these big days like this. I mean, how many times have we seen it in the past? But let's go back to where I was. The Fed keeps trying to get us enthusiastic by saying the Fed keeps on increasing the liquidity, massive amount of liquidity. It's not money. That's not what's happening. They don't print or increase money. When you hear they don't put it into the money supply. There's a big misunderstanding with that. So what it is this. When they increase the so-called money supply, that only occurs when banks open up new deposit. That M2 money supply only goes up when they create the banks, the number one, they create new deposits. You go get a loan, they take the money, they deposit it. And the other way you increase the money supply is when the government sends out your Social Security checks, pays the federal employees. That's what increases the money supply. Let's go to the chart. So when you hear about the money supply, just take a look here, I'll show you. This is the money supply right here. And when they say, look at this, look at the massive liquidity the Fed is putting into this economy and stock market, that's a bull-faced lie. That's not what's going on. They're not putting money in there. What the Fed does, or how the Fed participates, is they use tools to increase, to speed up the liquidity that's already in the system, to speed up the dollars that are in the system. That's very important to know. It's a big difference. They're not adding liquidity, not adding dollars. They're not doing that. They're speeding up the dollars. So when you feel you're justified, and they make you feel that way, Wall Street or these jibber jabbers, oh, you should be buying stocks because of the massive liquidity that's going in here. No. So how they speed up the money is what you got to watch. And they do that through their tools. And their favorite tool is the discount window. That's their favorite. They can loan money to corporations and so forth on short term, a little bit of collateral. That's their favorite right there. So low rates, of course, that's another tool they use. QE they use. T-bills, they're buying T-bills, a lot of T-bills right now. And they call it QE, and it is. But people think, I better go buy because we have another QE, and they're thinking of 2009 to 2012, 2012, all the way up to where we are today. No, those are T-bills. T-bills only go in and just does maintenance, that's all. So it's like maintaining your car. You don't get a new transmission. They're in there changing the oil, stuff like that. Well, that's what one of their tools are, these T-bills, and they're doing a lot of that right now because they're worried. The repo pool, it's another way they speed up the money in the system. And the discount windows, this is their favorite, and QE, purchasing treasuries, and we saw all that, especially 2009 to 2012. So what does that do? It acts as an accelerant, like gasoline. And your earnings, think of your earnings. Everybody thinks earnings. Earnings is not the driver. Everybody thinks earnings is the driver of stocks. No. It's speeding up the liquidity that's already in the system. So it's important for you to watch what tools are they using. If they're using those tools, T-bills like right now, and a repo, which they're doing right now, you know they're speeding up the money, okay, to go through the system, but they're not adding to it. Think of it as it's like gasoline, accelerant, like an accelerant. It's like throwing gas on. That's what that is. Earnings, remember, they always make you think earnings too is wow. Earnings. Mother's milk of the stock market. No, it's not. Earnings, and especially tech stocks, support the upward trend. But it's the tools, that's the accelerant, is what drives. and speeds up the money that's in the system. And then underneath that, for support, you want good earnings in the tech stocks, okay? And that makes a big difference. So that's what's going on right now. So again, they never talk about it. They're not going to talk about it. So investors' biggest concern that I'm hearing it every day is the tech bubble, is AI bursting. Yes, that's a real problem. That's a problem. Oracle is the breaking point. And remember, they tried to speed up that money in the system, that liquidity, to keep the market up, to try to support the market, especially the tech stocks. But it won't prevent a bubble. I don't care what stock group you're in, banks or tech, which we trade all the time. When you start seeing the fundamentals crack, it's over. Oracle is the one fundamental we saw really crack. That's what's got people very, very nervous. Okay, is that Oracle, when that had its problem, that for professionals who know what they're doing, institutions who are the biggest buyers, that's when they started to dump. And what people don't realize right now, on a day like today where they're seeing the semis going up, and that's why you saw this morning the semis shoot up, then all of a sudden that's one individual stock went up, and then all of a sudden didn't hold its high on that candlestick. It pulled back to almost where the low was. Very few of these tech stocks, the semis, which is the strongest group, and is a powerful group, a lot of them, the majority didn't hold their opening high. They pulled back. So there's massive liquidity, okay, that is in the system. And as long as they keep doing that, as long as they keep speeding it up, using the tools, so that's why it's important for you to identify, and I identified the tools for you, but it's important for you to always, go back and look and say, okay, what tools are they using? Just go out, Google it up. What tools is the Fed using right now to accelerate the money? That's a big help, because once they stop accelerating the money and the cracks, remember, they can accelerate and have this massive liquidity, as they call it. It doesn't stop a crash. It delays it. And they've been delaying this bubble, this tech bubble, this AI bubble, by speeding up the liquidity, and why you're always going to hear, wow, unbelievable. Look at the increase in liquidity. Okay, I killed that one. But once you get a crack in the fundamentals, it's over. It's over, but they can delay it for a long period of time. So we have, again, the valuation is so stretched right now. So let's go back. I just want to show you over here, just so you know as we start moving along here. Everything you saw today in the tech stocks, let's go take a look at a few here, just to give you an idea what you should do and not do. So let's take the one that really took off, Micron Technology. There's the candlestick right here. See that candlestick? But this is the same candlestick over here. Let me draw you a picture. This is what Wall Street won't tell you about. So here's the candlestick today, right here. There's the candle. That's this candlestick sitting right over here. Okay, see this candlestick? That's this guy. Look what happened to most of them. When they opened up this morning up here at a high, like up here, look where it is tonight going into a close. They could not open and hold those highs this morning. And not all of them did well, by the way. AVGO did terrible today. So be careful. Be careful. Let's see what happens in the next couple of days. Join my gang, philsgang.com.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.